An important part of running any business is understanding and filing your taxes. The same is true for a successful online business. In this video, we'll focus on tax compliance, or more specifically, we're going to delve into the world of GST compliance for network participants. First, what is GST? GST, or the Goods and Services Tax, simply is an indirect tax that is levied on the supply of goods and services in India. Indirect because the buyer doesn't pay it to the government directly. The supplier, that is the merchant or service provider, has to pay GST to the government. And when you buy things from or use services of the supplier then recovers the amount from you, the buyer. GST is usually added to the price of the item or service you buy. Let's see, who has to pay GST? All suppliers have to pay GST at the notified rates. However, there are some exceptions. Let's look at the special cases where you do not have to pay GST. Firstly, suppliers who primarily supply an exempted product or service are not required to pay GST. For example, if you were a supplier of fresh fruits and vegetables, you wouldn't have to pay GST on your sales because fresh fruits and vegetables are exempted from GST in India. Secondly, suppliers whose annual turnover falls below the prescribed threshold are also exempt from this tax. GST law in India provides an exemption for small businesses with an annual turnover below Rs 40 lakhs and Rs 20 lakhs for northeastern states. So, if you run a small handicraft business and your annual turnover is Rs 39 lakhs, you fall below the threshold and hence are exempted from paying GST. Lastly, in the case of suppliers of certain services, when they supply those services through an e-commerce operator, also known as an ECO, the ECO itself has to pay the GST as if it were the supplier. This only applies to services that are notified under Section 9(5) of the CGST Act. These are services such as restaurant services, motor vehicle booking for passenger transport, accommodation services, and housekeeping services. In these cases, the ECO pays GST, not the supplier per se. For example, if a taxi driver provides passenger transport services through a taxi aggregator app, the taxi app has to pay the GST, not the driver. The next step is to figure out if you have to get a GST registration. So who needs to get a GST registration? Businesses that exceed the prescribed annual turnover threshold must register for GST, which depends on the category of state. E-commerce operators, including buyer applications and seller applications, who are required to obtain both GST and TCS, tax collection at source, registrations. Suppliers engaged in interstate supply must also register for GST. Suppliers who sell through an ECO are also required to get a GST registration. However, there are some exceptions. Some suppliers do not have to register for GST even if they sell through an ECO, and there are special reasons cited by the Government of India. This includes suppliers of products that are fully exempt from GST, such as farmers selling agricultural produce or greengrocers selling fruits and vegetables. Also, goods suppliers whose turnover is below the threshold limits and who only make intrastate supplies are exempt from this requirement. For example, these would be small kirana stores that only sell to customers in their neighborhood. Also, any supplier who provides services notified under Section 9(5) will also be exempt from GST registration. Now that we've covered who has to register for GST, our next step is to figure out where you have to be registered. Registration must be done in each state where the supplier is located. For example, a burger chain located in Rajasthan and Odisha would need to register in both states. Similarly, an ECO needs to acquire a TCS registration in each state where their suppliers are located. This applies even if the ECO's headquarters are in a different state. For example, if an online book market has its headquarters in Delhi and its suppliers, that is the booksellers, are located in Maharashtra and West Bengal, then the TCS registration will have to be done for both Maharashtra and West Bengal. We've learnt what is GST, who needs to register for it, and where. But what are your responsibilities under this GST law? Let's dive into it. E-commerce operators have a key role to play in the collection and management of GST. Except for some very specific circumstances, the e-commerce operator is required to collect tax collected at source, TCS, at the notified rate of 0.5% as of August 2024 of the taxable supply and deposit it with the government. The supplier must then pay the remainder of its GST liability directly to the government. Now, within the ONDC network, there are two distinct possibilities that we must consider. Firstly, when the seller application functions as a marketplace seller application, the seller application is responsible for deducting the TCS and the seller is liable to pay the GST. Secondly, when the seller application is an inventory seller application, the roles change slightly. In this case, it is the buyer application that deducts the TCS, while the seller application, which also operates as the seller, fulfills the responsibility of paying the GST. In the case of supply of services notified under Section 9(5), which includes restaurant services, online ride-hailing and accommodation services, it works a little differently. Here, the e-commerce operator must pay the entire GST amount, essentially stepping into the shoes of the supplier. As a result, no TCS is to be collected, and the supplier is relieved from the duty of paying GST separately. So, in the context of ONDC, when the seller application is also the service provider, such as a restaurant or taxi fleet owner, the buyer application is obligated to pay the GST, where the seller application is an aggregator but not the service provider. That is, it is a marketplace seller application. The seller application has to pay the GST. Apart from these responsibilities, ECOs are also mandated to file the appropriate returns and forms as notified by the Central Board of Indirect Taxes and Customs, CBIC. This obligation of filing returns extends to the suppliers as well. It is important to note that ECOs who have unregistered suppliers also carry the responsibility of ensuring that such suppliers have a valid enrollment number. Furthermore, if a supplier crosses the turnover threshold or begins to supply across state borders, the ECO must ensure that the supplier obtains a GST registration number. Understanding these responsibilities is crucial for maintaining GST compliance in the realm of e-commerce. A thorough grasp of these principles will allow ECOs and suppliers to navigate their GST obligations with greater confidence and accuracy. With that final note, we've learned a lot about GST and the rules and responsibilities related to it. Let's quickly summarize and refresh our memory. In this video, we have learned what is GST and who does it apply to? Who has to register for GST and where? Who is exempted from GST registration? Responsibilities of e-com operators under GST laws, GST in case of the ONDC network, GST in case of services under Section 9(5), and additional responsibility of e-commerce operators. Understanding GST compliance is crucial for smooth operation and legal compliance in any business, particularly for e-commerce operators. With this new information, you can now understand the complexities of GST compliance and stay on the right side of the law to ensure a smooth business. With this, we wrap up this session and hope that it has all the tips you need to grow your business.